Manishi Raychaudhuri joins us now. Manishi, good morning. Let's take the conversation forward. Manishi, why have large cap stocks in India got massively re-rated? HUL, ITC, Reliance. There's nothing which we can pick up fundamentally which explains a 7-8% move in some of these heavyweight stocks. Are we missing on something? Are markets indicating something? Or do you think this is hot air? I'm rolling a lot of questions into one because we're trying to understand that what explains a 10% surge in the market from the recent low.
Right. It's difficult to talk about the short term, but if you look at the long term, I think the wind is blowing in favor of these large cap stocks, which basically represent the frontline market leaders in every segment. These market leaders have gained because of two or three simple reasons. And it's partly got to do with the environment that we're living in a post-COVID world, where the big has gotten bigger. The frontline market leaders have been able to, not only reach a much larger quantum of customers through their very efficient and widespread distribution reach, but they have also been able to pass on the price increases in various different segments. I mean, we have seen input costs increase both in terms of commodities or in other areas. But it's really the large cap frontline market leaders who have been able to pass on these cost increases to their customers. Um, we have seen this phenomenon even in the service sector. I mean, if you look at the IT service companies in India, it's really the large frontline companies who are winning the lion's share of the new orders that are coming in from the Western Hemisphere. So, and I would also point out that this is not a phenomenon that's unique to India. We have seen these concentrated rallies all across the world in rest of Asia and other Asian markets, also in the developed markets in the United States. We all know about the FANG stocks, or basically the top 10 or 20 stocks in the United States that have driven the lion's share of the returns. So I think this is what it kind of correlates with what has happened fundamentally on the ground, and for all we know, it might continue for some more time.
Okay. Manishi, the other question which we are trying to debate and understand is that, okay, fair point. Future is looking decent, the medium term outlook is strong, flows are strong. But why is that unlike any other bull market when we had similar conditions where growth was strong, liquidity was strong? We saw a lot of volatility, which is that markets, even in a bull market, would see a swing of 15-20%. That's par for course. But this year, not only for India, every market has seen a vertical rise. How come there is no back and forth volatility?
Well, that's not exactly true. In case of some of the other Asian markets, I mean, if I look at closer home where I sit in Hong Kong, the Hong Kong or the Greater China market, that's been quite volatile. And in fact, it has underperformed over the past 3 or 4 months. There are, of course, market specific reasons for that. As we all know, that there are regulatory pressures on quite a few of the Chinese sectors. But coming back to your original question in the context of India, it's actually a bit surprising. If I go back about 6 weeks or so, we upgraded India back to an overweight from where we were, an earlier neutral stance. But this massive rally has surprised us also. While we knew that there were quite a few stars aligning for India, a sharp economic recovery for one. Secondly, the currency remaining quite stable despite the Fed, or some of the Fed governors talking actively about taper and the taper expectations getting factored into the financial markets. And finally, the Delta variant of COVID, from which the Indian economic recovery has been sharper than expected. These stars were no doubt getting aligned, but even then, this sort of a straight line rally, for lack of a better word, has taken us by surprise. Um, I'm trying to think as I speak. I'm trying to figure out the reasons. The one reason that comes to my mind is, it's basically the lack of alternative large liquid markets, because I think institutional investors are now forced to think about something outside China. As we all know, that China is about 40 to 45% weight in MSCI Asia ex Japan. So if an investor has to think of something outside China, there are very few choices that he is left with. It's really Korea, maybe some of the Taiwanese tech stocks, and India. We have also seen in India some of these new listings of the tech mega trends, which investors are fascinated by. It is no coincidence that it's coming in at a time when the investors' focus is sort of per force moving away from some of those tech megatrends in China. So I think it's a combination of all these factors that have seen the forces coming together for India all at the same time. But let's wait and see how long this, quote unquote, this straight line rally continues. I think for now, the market might take a breather. We might see some short-term time correction, as we might call it. Over the long term, things still look quite okay for us.
Sure. Manishi, so this India, overweight that you just talked about, wanted to understand what are your sectoral overweights and underweights right now, given your bullish view on India?
Absolutely. So there are three buckets, you could say 3 or 3.5 buckets that we are playing in India. The first is financials. I mean, that's clearly the most economy sensitive sector as far as India is concerned. And within financials, we do have a large weight on the private sector banks. We have significant weight on the NBFCs. We're playing only through the real estate or property focused NBFCs, the mortgage lenders. We also have the insurance companies. And we have recently made a small entry into a public sector bank as well. But the bigger, larger weight still remains focused on the private sector banks. So that's the first bucket, financials. So both banks and diversified financials. The second large allocation is in favor of the IT companies. As I said, that the new order wins has taken a new momentum, over the past few months, and it's really the frontline large cap companies which are getting the maximum tailwind out of that. These are the companies that have also demonstrated that they're able to save cost in a new environment. Third, I would also point out very selective consumer plays, both consumer discretionary and consumer staples. But here we are really focused on the top rung frontline large cap companies. And as I said right at the beginning, that these are the beneficiaries of their wide market reach and the consequent ability to pass on the input costs to their customers. So those are the three main buckets. I would also highlight the sort of half bucket that I talked about, and that's telecommunications. For all practical purposes, the sector has become a duopoly, so we are playing that through both a leading pure play and a conglomerate. And that really sums up our India allocation in our Asian model portfolio.
Sure. So, but when you talk about telecom, Manishi, are you not worried about what's currently going on with respect to AGR dues and the battle that the incumbents are having with the government or the Supreme Court with regards to the AGR dues, the calculations, and of course, the big hurdle which continues to be tariff?
Right. So, I would say that a bigger determinant for the longer term future of the sector are really the market structure, where, as I mentioned, it used to be historically a very fragmented market. Now it has virtually become a duopoly. So the market structure has really become concentrated. Second, the future growth opportunities with eventual adoption of 5G and a much higher degree of smartphone penetration. I think the regulatory concerns that you talked about, they are valid, but it's as of now really one player who possibly is bearing the brunt of that problem, and in a sense, paradoxically, that has turned out to be a benefit for the other players in the sector, turning it into a duopoly. So those are really the longer term focus areas that we take into consideration. When allocating towards that sector.
Yeah, well, makes sense. Events like these really separate the men from the boys, as they call it. Hi, Manishi. This is Mubina as well joining in. I want to touch upon a point you mentioned earlier, and that is that, the Indian markets took tapering relatively pretty well. Yes, we did see a bit of a fall, but then the market was very quick to, run up and, make record high levels. But a large extent of the rally that we have seen so far was led by liquidity, led by very loose monetary policies by global central banks. We had this IPO rush as well, because companies as well were like, okay, there's so much free money, moving around, let me as well sort of cash in on that. What happens when we start seeing those signs of liquidity withdrawal? We have the ECB, they are expected to, say something on taper. Perhaps, later this month we'll hear from the Fed as well. So what happens then when we start seeing those signs of liquidity withdrawal?